Hello everyone, welcome to Just Invest Today, and today we have to talk about it, Alibaba and the potential crash. Man, there's a lot of things happen in China. People are worried about the bonds. People are worried about this company crashing, which is going to send shockwaves throughout the economy because they have a lot of liabilities. Some people are saying it could be worse than the financial crash in 2008 because of what's happening in China right now. So let's get into the article and let's find out what is happening. Look at Alibaba and look what it's doing right now, man. Look at this, $155, man. This is first day. It's dropped 3% today. Woo! 168, 7% drop in a month. Guys, you gotta remember, Alibaba was at 182 a month ago. And look, already 15% drop just in a month. So we understand the sentiment is bad. We seen what just happened with with Jack Ma's IPO, and then the whole and then have to break up. So we see everything going against Alibaba right now, but let's see what this is about. Do we have to worry about the economy in China just crashing, the sentiment getting even worse? We can maybe see Alibaba at 100 if you just do a stock analysis and figure out that the market sentiment against Baba and Chinese company is going to get worse and worse. So this has the huge potential of a crash. So what is China's Evergrande and why is it in trouble? So let's get into what this is about, why we might have to be worried. It can send shockwaves throughout China, throughout the USA, throughout the whole financial market. So China Evergrande Group is quickly becoming the biggest financial worry in a country with no shortage of them, with 300 billion in liabilities and links to myriad banks. Evergrande could send shockwaves through the financial system and the broader economy should economy strike. Its stock price has cratered and its bonds point toward potential default. Man, 100 billion in liabilities and the potential for default? Can you imagine what will happen? And the Chinese government is not really getting involved in this. I think what we've been seeing from the Chinese government, they're going to allow it for crash. They want these sectors that has corruption and they're not able to take care of the wealth kind of to get out the way. You see what they're doing with the casinos. You're seeing what they're doing with monopolies, with internet companies. Look at what they're doing. So I wouldn't be surprised if they just let this happen and let this $300 billion just go out the window. Even though that would send shockwaves. $300 billion, and a lot of these American companies probably have stakes in this company. So it's not just going to affect China, it's going to affect other countries too. Because we know a lot of countries have stakes in these huge companies. You have to be worried about what is happening right now in China. Investors aren't sure how. They're also asking whether major Chinese companies are still considered too big to fail by the central government. And that goes back to Alibaba. Are these companies not too big to fail? Maybe Alibaba can fail, which prizes stability. And what happens if they're not? So what is the Evergrande? Founded Evergrande, formerly called the Evengrande Group in 1996 in the group southern city of Guangzhou, expanded the real estate developer largely by borrowing. See, and that's what they want to get rid of. They want to get rid of all this bad debt going on. Xi Jinping is making a conservative effort to stop this, to stop all the borrowing, to stop all the casino activity, all the speculation in the market. He's making an effort to stop all of this. The Evergrande real estate owns more than 1,300 projects in more than 280 cities, according to the company website. See, this is the problem too. Look what they're doing. They're expanding in electric vehicles, media production, theme parks, soccer club. This is how they're gaining their debt. And this is what I want you guys to be worried about. When you're looking at companies, make sure they're literally focused on what they're doing and what the company is good at. This company should be real estate focused, but look how much other stuff they're doing, all the other garbage that's not really contributing to the actual company. A certain type of company can do this. Not a lot of companies can do this. So just watch out for companies that kind of do other crazy stuff that's not contributing to the actual business, and that's huge. And it only had a 4.7 billion profit in 2020, a second annual drop in a row, and revenue missed analyst estimates. This is the trouble with this company, which can send Chinese stocks, Alibaba, PDD, all those companies are in risk right now, and you have to be aware. You have to understand what is going on, because this is possible for a huge decline. And I want to know, are you ready to buy more Alibaba if it declines more? Tell me down below. Guys, like this video, subscribe to my channel. I'm providing a lot of quality content, and we have to know, are we willing to buy more? Warning officials that payments due in January 2021 could cause a liquidity crisis and potential lead to cross defaults in a broader financial sector. So this is what's gonna happen. Is the Chinese government gonna save this company? Because that's gonna be interesting going forward. We see people literally, they're not developing homes basically, and you see a lot of Chinese people just sitting outside, like banging on the door, just wanting to get in because they're not providing like liquidity. They're not giving them what they promise and what they're gonna make because they're not able to pay the bonds. They're not able to pay the debt that they incurred. So that's the issue with this. They have a 300 billion in liabilities, and they're projected to go bankrupt maybe if they're not paying. But the good thing is they have a potential to sell off all these random assets that they have. They've got like a financial manager person they just hired, and hopefully they can take care of all this debt that's just building up. And this has the potential for a huge crash, guys. So we have to understand that Evergrande has raised about 8 billion this year in August, selling shares in its EV unit. And that's what it's doing. It's going to sell shares in the EV unit. It's going to get rid of its tourism business. And it's the most crazy thing is you have to look at the bonds, and they're going to like, the rating on the bonds are going to go lower and lower and lower. And if they go to junk bonds, whew, you're going to see a huge crash if it goes to junk bond status. So look how much they pay, 669 million in coupon payments through the end of this year. That's how much you have to pay, and these coupons are not going to expire soon. They have a lot of debt. So, and they're hoping that the central provincial government comes in, steps in, and saves this company. We have to look at this video and see what the people are doing in there. Look at it. Look at what's happening right now. People are they're protesting outside the quarters. They want their homes, they want their money back. Because people, like, remember, home equity and having your money tied into this place that's not going to pay your money, that's not going to promise your homes because they have too much debt on their books because they're not able to afford it. Like, just look at the protests happening. Guys, we just have to understand, be aware of what's going on in the market right now. Man, leave a comment, like, subscribe to my channel, and I'll get back to you in the next video. Peace!